So first, some definitions and nuts and bolts, I think, to take care of, because we've got a pretty diverse audience here of technologists, finance professionals, and others. So let's talk about what is meant by the term asset class, just so we're all clear on that. Does anyone want to tackle that? Lucius, do you want to?
An asset class is basically something that's valuable, a store of wealth. So and that's what this is about. So it's not about Bitcoin as a means of payment. It's about Bitcoin as something where I can store wealth. I can store it somewhere and retrieve it somewhere later. And it's also not about transfer of wealth. It's really more like an investment.
Okay. Now, I was looking for something maybe a little more specific than that. From an investment perspective, an asset class will sometimes carry an official designation. Like here in Europe, you got the UCITS designation of kind of an official asset class. Something that family investment funds, for example, are allowed to trade into or invest in. And then coming from the equities world, which I used to work in, you have large cap, mid cap, and small cap. So maybe does anyone want to kind of take a crack at that part of the definition? Crypto cap? So what types of exotic or alternative asset classes would Bitcoin kind of fit in with?
Yeah, I think we're talking. A lot of people know us. I guess I'll give a little overview of what we're doing at CoinSetter. We're building basically an exchange aggregation platform that offers the best price in the market. Our goal is to be a deep source of liquidity, and in the background is this really high performance trading engine. And so, right now I think that a lot of hedge funds and professional traders have had a hard time, really onboarding into Bitcoin because, either the exchanges aren't conveniently located in their country, especially, if you're based in the U.S. There have been performance issues, as we all know, and so, we're, really about to launch a platform that aims to solve this, and I think, once that happens, we can see Bitcoin go to the next level. We're talking about all these companies that we would love to see come into the Bitcoin space, but I think we're still getting the fundamentals correct. And companies like us, I think TradeHill and Bitstamp are other very interesting companies. And as more and more companies like this are able to really establish themselves in the market, we can start to see Bitcoin proceed to the next level. We talk to a lot of traders being based in New York, and I think they definitely see Bitcoin as an asset that they're extremely interested in trading. And you look at our bid ask right now, and it looks completely messed up. Literally on our platform, you can click buy and then click sell and make $7. And I mean, like, nowhere else does this exist. So there's obviously a lot of opportunity there. And so, I think as the technology, the exchange technology really starts to come online, as an asset class, hedge fund managers and prop shops are very interested in adding this to their portfolio.
Great.
I think this is, a first kind of a reputation and technology-based asset. So currency is an asset class. So people actually invest a lot of money. We see it on eToro, on different currencies. And I think that's just, a subset of currencies that are based on reputation, not of nations, but of specific communities. And in this case, a very strong, very cool financial hackers community that are basically feeding this ecosystem. And I think it's the first, and we'll see more of these basically invented new asset classes, which are based on community and technology.
Yes. So normally a currency is backed by the rule of law, and this is the first currency backed by technology.
And reputation.
And reputation, yes.
Let me give Gatis here a chance to come in. So Gatis is from Exante, which I'll let him explain in detail, but basically it's the first company to, as he put it, institutionalize Bitcoin. We were just talking about Bitcoin as an asset class, talking about what is an asset class, everyone kind of understanding of what that term really means, both from an investor's perspective, or say like a family office that's looking to invest money in Bitcoins, versus, say, other asset classes like currencies like Yoni was talking about, or other exotic or alternative assets. So jump in with that.
Okay. I think I would need to give you a brief recap of what we're doing with our company. We initially we are a producer of a software. We've been in a high-frequency trading space, trading futures, stocks, currencies, fixed income, options, all the traditional asset classes. And a while ago, 2 years ago, we had an idea that Bitcoin has a potential to become an asset class. It was still a very sort of virgin asset class. And since we are a regulated entity, we have a financial license. We were not able to put Bitcoin within our platform, so our customers could access it among other asset classes. And the reason is because it's not an asset class. Until last year, when we set up a secondary market for hedge funds, we had this. We connected just two dots together. Since we have ability to trade hedge fund units in the secondary marketplace, we thought that it would be interesting to wrap in Bitcoin in a hedge fund so that our customers, which are professional customers, financial institutions, high net worth individuals, could allocate some part of their portfolio into the Bitcoin. So it was an easy process. We set up a hedge fund. It took us half a year, but eventually we did it. Now we have this hedge fund. One hedge fund unit is one Bitcoin. It's traded on the same balance sheet with all the asset classes, together with stocks, Google, Microsoft, all these big names. Our customers also are keeping a Bitcoin hedge fund, which is, I think, quite an achievement because they can report to auditors. Auditors understand this financial product, which is hedge fund. It has NAV. We also convinced our administrators to. We're not convinced. We taught them. It was a very difficult process. We taught them how to track the NAV, what is the value of the Bitcoin. So it's working now. And well, this is the background.
Great, that's excellent. So Luzius, you guys are looking to create the world's first Bitcoin exchange-traded fund. Maybe you could just talk about what an ETF is, just so everyone.
Yes. So an ETF is a security that's traded on a stock market. So that's why it's called exchange-traded fund. So probably you know gold ETFs, that are companies that are basically holding gold and their shares are traded on the stock market. And I think it would be good if the same would exist for Bitcoin, because it would make Bitcoin much more accessible to average investors. They could just call their financial advisor and tell them to buy Bitcoins or Bitcoin ETF on the stock market. They could. It would provide much more liquidity. Spreads would tighten. One could do derivatives on Bitcoins. The banks could create structured products based on Bitcoins. So it would bring Bitcoin to the financial world. And we've heard the VCs before. They didn't open a Mt. Gox account so far. It looked a little special to them, and it would be much more accessible if they saw Bitcoins in their balance sheet in their UBS online banking brokerage account.
Great. And Luzius, have you looked into which exchange you would register, or which market you would look to register your ETF?
Yes. So I'm based in Zurich, so I'm naturally looking at the Zurich Stock Exchange to see if it can get listed there. And our lawyer told us it's feasible, and that's the stage you're currently in. So if you are interested in all the details, I have two colleagues here, and they can hand out fact sheets about the fund. So it's provisional at the moment, and if you have expertise or want to help us or want to commit your Bitcoins to fund us, you're very, very welcome.
I mean, one of the themes of the conference has been trying to make Bitcoin more accessible to the average investor, the man in the street, if you will. I mean, is an ETF a step in that direction? I mean, would people on your platform want to?
I think we're seeing appetite for people on eToro who want to buy Bitcoins, and we're actually internally trying to figure out a lot of the stuff that everybody's trying to figure out. Is this a financial asset? Is this an asset class? We had actually an interesting discussion with the auditors, and it seems that auditors generally, like the big four, don't recognize yet Bitcoin as a financial asset, which means if as a company you hold Bitcoins, it's sort of like you started to buy bottles of water or chairs. It disappears from your balance sheet. So you either need to find a third party to buy Bitcoins in, or if you hold the Bitcoins themselves, it's like you don't actually have an asset class. From that point of view, today, and there's a lot of discussions about it, at least from auditors' point of view, Bitcoin itself is still not an asset class. Their hedge fund, for example, is an asset class. That's more from an audit point of view.
I want to give Jaron a chance to come in here. So CoinSetter specifically is targeting Wall Street firms, going for the big investors, not,
Right.
And I'd love for you to talk about that strategy and whether that's the first kind of market to really go after versus, say, medium or smaller players.
Yeah, no, so, when you come to our website, especially in a month, it'll look like, if you're familiar with the website FXCM, which is a large Forex trading platform, we're very much like them. So, when you go to their website, it looks like a website targeted towards retail traders, and they are. I mean, retail traders trade on it, but in the background, there's this, very large institutional trading platform, and we operate in a very similar fashion. So, like when you follow, Twitter, CoinSetter on Twitter, and you look at our Facebook, I mean, that's very much targeted towards, someone like me, or just someone who hasn't traded on the UBS trading floor, and enabling them to regularly trade Bitcoin, go long and short. I think there are other good options for people who really want to take delivery on their Bitcoins, and that's not necessarily the space that we're going after. For me, I have certain days where something will happen in the Bitcoin market, and I mean, I end up going on Coinbase a lot of times because it's convenient as a U.S. customer. But Coinbase is a terrible platform. No offense to Coinbase team, but it's a terrible platform for day trading, and that's really not what they're trying to do either. And so I think that there's an open space in the market for that kind of product, which we're trying to cover. At the same time, most of the people who actively reach out to me are, market makers, small to mid-size hedge fund traders and so forth. So, I think it would be very hard to go after the really big fish right now. The market's just too small. Retail traders are still trading on exchanges, which, like, if you looked at the New York Stock Exchange, that's not how it happens. Like, you go to a broker. And so, over the long run, I think we are really trying to fit that position of really targeting the retail trader, but at the same time, in the background, our much bigger business will be on the institutional side.
Great. That's a great segue to a topic which came up, I think, earlier today. I forget which panel was in, but there was discussion about how one of the things that needs to happen with Bitcoin is to see a reduction in volatility, that the wild price swings are something we want to try to minimize. And actually, Yoni has a very different view on volatility than the perspective that was raised earlier. And I wonder if you want to share that with us.
Well, I think generally the price of Bitcoin is really based on the volume in Bitcoin. And the volume in Bitcoin is somewhat very much related to the volatility. So it's a known fact that increased volatility is increased volume, almost equal. And if everybody thinks what happened, past month, less volatility, less volume, less articles about Bitcoin, less new people who talk about Bitcoin, less new people coming into Bitcoin, less new stores coming into Bitcoin. 3 months ago, big hype every day, everywhere in the papers, going from 30 to 240, wild swings, stories, everybody's talking about it. It's everybody's talking about it, the coffee houses, where's Bitcoin, how's Bitcoin? And that's what's pumping I believe, a reputation-based currency. People actually talking about it. And if people are talking about it, it drives volumes up and volatility up. So my guess is we'll see another spike in volatility, and it'll just, every time it'll be this, cycle of spikes, volume, prices going up, prices going down. Because we've been here last year or 2 years ago?
2 years ago.
2 years ago, yeah, when it went from up to 35 and then back to $2, then it rested on $2 to $8 for almost a year and a half, then it started climbing. So I think buzz is good because Bitcoin needs more people to talk about it. And buzz creates volatility, and volatility creates buzz, which also creates volume. So they're all meshed together.
Jaron, do you want to say anything about how important high levels of volatility are to CoinSetter? Is that something you see as important to attracting the customers?
For us, it would be a huge positive from a revenue perspective. But I have a view where in the near term, for the next 2 years, I see Bitcoin being very volatile. It is what it is. It's a very new product. People have a hard time figuring out how to value it. But I see over time, and I think the last panel discussion really hit on this very well, which is over time, a lot of apps are going to come into play using Bitcoin as an IP address for money. And I've become increasingly excited about Bitcoin's place as an IP address for money. I think that the way that most consumers will use Bitcoin will not be, they won't even realize that they're using Bitcoin. They'll be doing cash to British pound or cash to cash transactions to their friends, but they'll be sending it to their friend's Bitcoin address. And I see the exchanges being in the background of that as a liquidity source, doing these constant transactions that'll be happening. And when that happens, that will really start to create a base for a valuation on what a long-term valuation could be. Because in the end, if someone pulls their bid from the market, there's going to be another one right under it to take its place. And so as you see more transaction volume happening, volatility should come down.
Do you guys want to say anything else about volatility before we leave that topic, or it's been covered? Or
Well, Bitcoin is nothing but volatility today, so it's. I think I'll bring some maybe other points from financial world, since the topic is Bitcoin as an asset class, right? And maybe stress out what we think is the biggest flaw or the biggest obstacle that Bitcoin has to overcome. I think if you look back 100 years, there has been a very few evolution in the financial sector as a whole. So essentially, Bitcoin is not. We don't perceive Bitcoin as a currency. We do more perceive it as a future technology. So if you look at all asset classes like stocks, derivative marketplace, OTC marketplace, etc., all these financial instruments, in fact, should learn from Bitcoin in the sense that well, I don't want to go into technicalities of how clearing works, what is Euroclear, Clearstream, CLS, all these SWIFT, and etc., all these organizations and what they do. But essentially, it is an Excel. So basically, if you go back 100 years, we didn't have Excel, right? All transactions can be instantly reported to database. All data can be instantly
More like Google spreadsheets because everybody can see the same thing.
Yeah. So why the evolution is not happening is because there is an obstacle, and one of the obstacles is that no one is interested. This is the true reason. It's probably the same with alternative energies and all these other innovative projects, because if a very good example was then when currencies, there was a project where Chicago Merchant Exchange wanted to start trade currencies Tom, like in Russia right now, all currencies are exchange traded. And this project failed for one reason, because if you do not forbid something like OTC marketplace, which currencies are traded on OTC, because it's not transparent, prices are not transparent, there are slippages, last looks, etc., etc., etc. So there's a plenty of ways how you can manipulate pricing, how you can adjust pricing, delete pricing, etc., etc. You cannot do it on exchange. We are talking about transparency here. Bitcoin is a transparent technology, and it will be very difficult to sell it to the mainstream financial world.
Okay, great. Just I wanted to bring up a subject of which has come up and get this panel's reaction to it, which is this tension, it seems, between Bitcoin's qualities as an excellent store of value with it becoming adopted widely as a medium of exchange. And I just wanted to ask this panel here, do you see, does Bitcoin need to become widely accepted as a medium of exchange to really take off? Or can it be a great asset class and remain a great store of value without wide adoption by merchants for everyday goods and services transactions? Yoni, you want to?
Yeah, so my quant here just gave me the formula for the Bitcoin price. So this actually predicts the Bitcoin prices in the future. And seriously.
Can I have that?
Yeah. Sorry, so there's hidden formulas to answer. But generally, I think it's so our take is Bitcoin price is based on two things: the volume on the Bitcoin network, which is exactly what you're talking about. It's mass adoption, more people using Bitcoin, more people buying stuff with Bitcoin, more VCs investing in startups that do stuff in Bitcoin, so they buy more Bitcoin and sell more Bitcoin. So it's a volume-based economy, and that's what's going to price Bitcoin. So, by the way, all the people here that have Bitcoin, buy something with your Bitcoin, it'll go increase the price of the rest of your Bitcoin. Now, all you need to do is take that and deduct noise, which is caused because of speculators, and basically the noise because of mining. So basically just take out the mining. So it's a market cap based on the volume of the market cap, the need of the community, deduct the noise of speculation and the decrease in mining. So I believe that unless we see, so I think Bitcoin is here to stay, but the price of Bitcoin and will be dependent on the mass adoption of it.
I have a somewhat different opinion. I think certainly it helps
I
if
have
there.
a formula, so you're wrong.
Yeah. So it certainly helps if there is a community and lots of payments are being made to buy actual things. But to have Bitcoin as an asset class, the most important thing is that it stands the test of time. So the longer it exists and the more stable it proves, the more attractive it becomes. So I think the main ingredient here is time. And the other things are secondary for it. Look at gold, for example. Gold, the main value comes from being an asset class and not from being used in jewelry or electronics.
It says here, by the way, time-weighted volume. So it's volume across time.
Ah, so your formula covers it.
You know, I think a lot of people actually, a lot of the old school Bitcoin people who have been around since the beginning, tend to be highly political about it. I think most of us probably share similar ideologies broadly, but the really hardcore people see it strongly as a currency that they want to use day to day. They see it as like your private Swiss bank account, and it is those things. But what I believe that VC interest and really how widespread adoption will happen is really as Bitcoin as an IP address for money. I think Ripple's awesome, but I think Bitcoin I think it'll play a very similar role to what XRP does within Ripple, but in a more decentralized way. And again, like I mentioned before, I see the exchanges kind of being the backbone, or as Charlie Shrim would say, the blood of this whole system. And so when I look at it, it really it isn't as much of a currency as I think a lot of people stress. It really is that IP address for money on which you can do dollar transactions.
So in short, we don't need to see it being accepted by pubs throughout London for it to really succeed. That's not a mandatory step.
In fact, I would say that that is more of a headline, and that could never really scale. Like, I mean, if that was all that Bitcoin was going to be, we probably wouldn't be here today. And a lot of the VC interest there is in Bitcoin right now probably wouldn't be there. You know, that stuff's really cool. It's kind of fun, and I do think the currency thing will happen. But I really see that as a 50-year use. So, you know, in the end, you know, right now, Bitcoin can be an IP address for money. And as it becomes more stable in its value, then it actually becomes even more interesting for, you know, different countries or offshore islands that may want to use it as a currency.